All right. Hey, all right, here we go. We're live. I'm here with Joe Kelly, Katie Langston, and Micah Anderson to have a fun talk about businesses building their outposts. And for people wondering, okay, so what does that mean? We have so many different things that Bitcoin touches at this point, or what you can do with Bitcoin, whether that's the treasury companies, which we are using Bitcoin as a treasury asset, which has gotten a lot of news lately, using Bitcoin as payments, financing, mixing it with real world assets, which Katie's, an expert in that area, which we'll get to today. But in general, just building businesses with Bitcoin kind of at the center, or using Bitcoin in some form or fashion. And so to kind of get this going, I'm going to pass it around. We'll start off with Joe, just kind of intro yourself and give people a little bit of a background, and then we'll dive into some of the topics.
Great. So I'm Joe Kelly, the co-founder and CEO of Unchained. We got started in 2016 timeframe, really with the idea that the long-term Bitcoin holder is going to be underserved by traditional financial services. And so built a brand and a business around serving their needs, usually for individuals, but also we have a good segment of our clients that are businesses, and then definitely use Bitcoin in how we operate Unchained and have all our products really focused at it.
Okay, let's go over to Katie next.
Hi, everyone. I'm Katie Langton. I am a managing director at Newmarket Capital and Battery Finance. Newmarket Capital is an asset manager with about 3.5 billion AUM, and we launched Battery Finance as our Bitcoin and credit investment strategy. We are providing loans that mix physical assets with Bitcoin collateral.
Okay, and over to Micah.
Yeah, Micah Anderson. I'm the CEO of a company called Leef Brands. We are a publicly traded cannabis company that is exploring utilizing Bitcoin to improve our business. We use Unchained as our custodians, and I'm happy to be here to talk through and be a part of this conversation.
All right. So anybody hearing those intros, I'm pretty sure the most fun one to start with is going to be Micah in the cannabis space. And I'm kind of curious. So you mentioned that you're using it as a treasury asset. I'm also curious if you've explored with it from a payment standpoint, incorporating Bitcoin into your business. Correct me if I'm wrong. You're out in California. You're headquartered out in California. And I'm also curious kind of how the state policies and whatnot kind of play into Bitcoin from a payment standpoint, just beyond using it as a treasury asset.
Yeah. So I guess just to give you a bit of background, so our industry's unique for those that don't understand. So like we're in an industry that's legal at the state level and illegal at the federal level, which makes it an interesting landscape to navigate, especially from like a banking and regulatory standpoint. So I guess to kind of take your question, we're a publicly traded company. The capital markets in our particular sector they've been really harsh over the past handful of years. There's been investor fatigue, and so you've seen a lot of the valuations of these different companies kind of fall off of a shelf. And someone brought us this idea that basically what Saylor was doing a couple of years ago, and we started exploring it, and we just have incrementally been educating ourselves on what Bitcoin is, how it can help our company. And so, Preston, to your question, so we started off with like, let's just figure out if we can figure out how to take a payment. So we put it out to our clients that we would take Bitcoin as payment, and have been able to collect a handful of coins as a result of it. We have a store in Southern California. We set up the store to where we could take Lightning payments, and it's been interesting to see. We actually have people that come into the store because they know that we are into Bitcoin, and they want to support other Bitcoiners. So it's been a very cool thing to see. So that's been kind of step one for us. Step two is just like, okay, maybe there's a way for us to start rolling more cash into Bitcoin as a way to improve the balance sheet. And we're taking a slow approach to it. We're an operational business, meaning like we've been at it for 10 years. We're not going full court press on like considering ourselves a treasury company where we're offering unique strategic equities that have never been done before. That's not really what we're doing at first. So yeah, hopefully I answered your question.
Yeah, no, how do you think through kind of the like what you sweep into Bitcoin versus what you keep in cash or fiat versus any other type of investment opportunities? I'm assuming that whatever your free cash flows of the business are, that's kind of the number that you're sweeping into Bitcoin. But I'm more interested in just kind of hearing your strategic, like how you think through that the math of that and managing Bitcoin from a keeping it on the balance sheet standpoint.
Yeah, I mean, so the goal is like whatever Bitcoin we end up taking as payment or cash that is swept into Bitcoin is something that we don't touch. It's put off to the side, and we, the goal is to never need that cash. So, transparently speaking, we have not, like, the company's gone through a bunch of transitional things. I'm not going to go into all of the details of it to get ourselves into a more profitable position. So Q3, Q4 of this year has kind of been an eventful year for us where we've gotten ourselves more profitable. And so the idea is to sweep more of the cash as much as we can into Bitcoin, but not so much to where we are slowing down the what we need to do to operate the P&L side of the business, I guess. So yeah, that's really how, it's like managing, we need, X amount of dollars in the budget to run the business. So that needs to stay there. Anything extra goes over to this side, into the Bitcoin side.
The same question to Katie and Joe. Like, how are you guys thinking about like the working capital concerns and what your fiat denominated expenses are versus what you're sweeping into something that's much more long term? Is it all swept into Bitcoin, or is it swept into other marketable securities? I'm just kind of curious how you guys think through some of that.
Yeah, I can jump in. I mean, we're a private company, so our goal is to just continue to add to our Bitcoin treasury over time. We use liquidity products when useful in order to continue to maintain the Bitcoin treasury and not have to liquidate. And the goal is, like I said, and similar to Micah, we're just trying to add to it, as much as we can when it works with the budget of the company, the forecast for our fund performance, our management fees, and to maintain, our operating expenses, which is, mostly human capital, and then just continue to grow the treasury over time, which we've had it in place for a few years now, and it's already substantially grown on its own, which is why we do it. And so it's just been a really successful strategy for us so far.
And Joe?
Yeah, so there's a couple ways to try to answer this. We were a Bitcoin focused company. We're also venture capital backed, so have raised over $100 million of venture capital. And early on, a lot of the comparisons were from those investors were, well, should I invest in Unchained, or why not just invest in Bitcoin? That kind of a hurdle-based approach, because they were already familiar with it. I can say, I think fortunately we have outperformed Bitcoin on just like an equity value kind of basis. So I think there's, at least some of the math has worked out for people, while at the time it was kind of a more of a like compassion-based argument. Well, don't you need these services exist, or shouldn't you peel off some of your stack or make some marginal investment in services and products for Bitcoin? And we did, before any kind of profitability, or what was further out, like our Series A timeframe of 21, we were able to allocate, or we had investors that were comfortable with our allocating some of that investment into Bitcoin, and that we've been able to hold ever since. It has played a role as well in how our trading function operates, that clients, it became kind of an inventory for some time for the Bitcoin that we would sell to clients and then replenish on our side. So just mechanically in terms of how a trading desk works, that's since evolved somewhat. And then today, I'd love to be so profitable that we would just be adding to our stack all the time. But we are in a very strong growth moment for the company, and so we have added significant headcount over the last year or two. And so there's just a lot of ways we have to lean into that and lean into being able to serve the clients that are coming in. I have throughout that time, while we've toyed with or looked at, well, at times, and and it's not times of plenty, whatever the times of famine, Should we be selling Bitcoin or managing things? I've kind of always maintained the heuristic of at least having 18 months of cash runway of just pure dollars that if like revenues dropped off or something else that we're able to finance the operations of the business and continue to make payroll for 18 months at least. And so I think having some heuristic like that is always something very helpful for a company to be able to fall back on while Bitcoin is volatile and over that kind of horizon. If you couldn't stomach a significant change in its price, or if that affected now your hiring and operating plans, that would be serious. So I still see probably applying something like that on an ongoing basis, while even the maturity of Unchained is growing.
You bring up such an important point that I see all the time on the venture capital side, because when you're funding a company, it's because it's not profitable. That's why they're raising the round. And it immediately goes to, especially with companies that are Bitcoin, the founders are Bitcoiners, they understand Bitcoin, and they're receiving this influx of cash because they did a Series A or B or whatever the round was. And the question immediately turns to, should we take a portion of this and put it in Bitcoin, or should we keep it in cash and make sure that we have this runway to achieve whatever milestones they've laid out? And it's such a different thing to think about compared to a company that's already profitable quarter by quarter, and they can just kind of sweep without really kind of thinking about it too hard. They can just sweep whatever they're making into Bitcoin, and then whatever working capital concerns, whether it's 6 months or 9 months or whatever they do. But I think you're exactly right. I think for a company that's not profitable yet, if people are listening to this and they're in that camp, because 18 months, like when you look at any downturn in Bitcoin, some of them are 12 months, maybe even up to 2 years before Bitcoin will get back to a price level. And if for whatever reason you get this influx of capital that's to keep you alive as a business and to get you through the next milestone, you need to make sure that it actually gets you there, and that you're not handicapping the operations of the underlying business because you went out and you did something that's somewhat speculative. And I don't care what people say, when you're dealing with an asset that has 50 to 70% annualized volatility, that it can become speculative when you're looking at these windows of a year or 2 years and you're putting it into something like that. So from like a treasury management standpoint, I think that all of the comments are really important. And I think it's important for, entrepreneurs or business owners to delineate, am I profitable? Yes or no? And then if I'm about to become profitable, maybe you can kind of adjust, those working capital concerns and what those fiat denominated expenses are versus, Bitcoin on the treasury that you're trying to grow. But
even in the pre-profitable case, because Unchained is an example of it, but there's plenty of others in the market that are only kind of still around because they received venture capital in 2013, put a bunch of that into Bitcoin, and then it became this huge ballast for them over time. So it's hard. I think you could still see outcomes like that with people that allocate new rounds into some Bitcoin, but it's a risky calculus still too.
The thing that really kind of like just makes your head spin is I've seen entrepreneurs that have received an influx of an investment, a cash investment, and it was at a market low. They go in and they bought a bunch of Bitcoin with the proceeds. Because at the end of the day, if I'm not controlling the company or have a controlling share in the company, those entrepreneurs can go out and do whatever the heck they want. And I've seen these companies extend their runways 6 to 8x what you initially thought it was, but a lot of it was the luck in knowing where they were, the luck of when they bought it in the market cycle. And so it's a really difficult conversation and, thing to think through of like how speculative you get with an asset that is just so crazy volatile and you're sticking it on as a treasury reserve asset. But yeah. Okay, I really want to, Katie, I want you to talk about what you're doing because I find this really fascinating and I find it really interesting, mostly because you're mixing assets that the mark to market on them is really slow, and you're mixing it with something that the mark to market is literally on a secondly basis that is hyper liquid and hyper volatile. And like, what do you get? And like, I'm also concerned about the education burden that I'm assuming you have as you're dealing with some of these real world assets and what you're doing. So give everybody like a broad overview of what you're doing in an easy way that they can understand it, and then maybe talk through some of those ideas.
Yeah, definitely. So what we're doing at Battery Finance, I mean, like I said, we're an asset manager. So we're managing funds on behalf of mostly institutional investors. And our strategy is a strategy that blends private credit and Bitcoin. So what we're doing is we're lending fiat loans, long-term loans, like 8 to 10 years, to borrowers that have a cash flow producing physical asset, like commercial real estate, for example. And so we underwrite the commercial real estate asset and rely on that physical cash flowing asset to pay our interest over time. You know, we charge a normal market rate. We rely on that asset if there's debt, principal, amortization payments. We rely on that asset to make those payments. But we also have another piece of the collateral package. We have some Bitcoin as collateral. So we have collateral, we have security over the physical asset and some amount of Bitcoin. The physical asset is at least at the outset, is the much larger piece of the collateral package. We typically see about 20% of loan proceeds that go into Bitcoin. So we provide the proceeds that acquire the Bitcoin. So the borrower doesn't have to bring existing Bitcoin to the package. We can use the loan. And it looks like a normal fiat loan. The only difference is we have this additional asset that is totally uncorrelated to the real estate asset, that provides downside protection. You know, if something goes wrong with the loan, with the building, we don't just have a long recovery process of taking over the building. We can tap into the Bitcoin collateral immediately. So there's downside protection. And then the borrowers benefit from a piece of collateral that is not performing in line with the building, has nothing to do with the building's performance, and over a long period of time, historically, has always performed very well. And we share in the upside of that Bitcoin collateral with the borrowers. And so the issue of the volatility is not too significant, because at least in the outset, the Bitcoin is a small piece of the pie. And so as Bitcoin kind of does its thing and moves around in the short term, it doesn't move the needle drastically on the overall collateral package. We don't have increased collateral requirements. We don't have margin calls. If, you know, the Bitcoin drops, you know, the Bitcoin can just sit and do its thing in cold, secure storage over the 10-year life of the loan, and we're not going to touch it, do anything with it for that full period. And so what it does is, if Bitcoin goes up in value over time, as it has historically, we're actually de-risking our position, because the overall leverage on the two assets is coming down pretty steeply over time, and much faster than it would if you just were lending a traditional commercial real estate loan.
I'm curious, so are they getting a lower rate because they're posting that Bitcoin as collateral in addition to just the value of the property and physical, you know, space?
No, so we're charging a mostly market rate. What they're getting is a few different points of flexibility that they don't get with a traditional loan. One, higher leverage often, because we're looking at a larger collateral package than if we were just lending against the real estate asset alone. Two, we have a lot of flexibility in things like interest-only periods, long amortization periods, to maintain healthy cash flows to the borrower. We don't charge a lot of fees. We don't have any prepayment penalties. So we sort of work with each borrower to come up with the right terms, because there's two parts of the economics. There's the interest rate, and then there's the appreciation share on the Bitcoin. So the more Bitcoin in the package, then, you know, the lower our appreciation share could be. If a borrower is super rate sensitive, maybe we lower the rate a little bit below market, and we have a higher appreciation share. So there's a lot of levers to work with and a lot of features that we can provide that just traditional lenders can't provide that makes our package overall just very attractive, even if you're not even looking at the long-term Bitcoin returns.
Katie, are these people coming to you as Bitcoiners to, post that as collateral? Or are you educating them saying, hey, we can do these things and kind of get you what you want if you, buy the Bitcoin right now and post it as additional collateral, and it's almost like they're learning about Bitcoin on the spot as they're taking out the loan?
We're seeing a mix. We are definitely, Bitcoiners have been reaching out to us, and those borrowers want to, maximize the debt size so that we can buy as much additional Bitcoin as we can, because then they're not contributing any new Bitcoin. They're not contributing any of their existing Bitcoin. They're just getting new Bitcoin that is then up for the appreciation share. We are also getting what we call Bitcoin curious real estate investors who, don't know a whole lot about it, don't really have any Bitcoin, but are super interested in just our overall structure and all the flexibilities we offer, plus this upside potential that they don't have with any traditional lenders. So it's definitely been a mix. The education on the borrower side is more when a Bitcoiner comes to us and is super interested, but they have other partners that aren't Bitcoiners. And so they have to kind of educate their partners, or they bring us in to educate them. So we've done some of that work. But yeah, it's really a mix. The Bitcoin curious and the Bitcoiners are all coming to us.
What's the most surprising thing that you have seen by operating in this space?
Great question. I've been surprised about when we started getting people reaching out to us, I expected there were going to be a lot of strange assets and requests, and really it's been very traditional. It's people that own traditional assets that have large portfolios, have been doing this for a long time, and are either frustrated with current lending options or are very Bitcoin open and are just so excited to talk to us because we're offering this as a solution.
Do you see much competition in the space right now, or is it pretty blue ocean for you?
It's wide open. We're competing against traditional lenders. I think that's our biggest competition right now, because people are still wrapping their head around Bitcoin. And then Bitcoiners, they're also still kind of wrapping their head around like a 10-year loan that incorporates Bitcoin, and the Bitcoin isn't touched. So we haven't seen anyone else that is out there providing what we're providing, but we're constantly compared to traditional lenders and competing with traditional lenders and optimizing our structure to benefit our borrowers as best as we can.
This next question's for the group. I'm curious what your biggest challenges or blockers are today. Is it accounting treatment, regulatory comfort, internal controls within your own company, and like how to manage the Bitcoin and how it's received? Like, the floor is open to all three of you, but what would you say is that biggest challenge with dealing with Bitcoin right now?
I guess I'll jump in there. Just from an operating standpoint, I think one of the unique things that we deal with is just the industry that I'm in. Going out and speaking, in the beginning, speaking with investors about what we wanted to do, the knee-jerk reaction we got was more, confusion, thinking that we were taking a departure from the core business. And then once we got through that and went through the education process, just to say, no, that's actually not what we're doing. We're trying to find a way to amplify what we're doing. We were able to get through, I guess, the internal conversations with shareholders, and then going out to the capital markets and trying to raise specifically for Bitcoin. That's where I think that we've just ran into, like, well, because of what we're doing is like I said, federally illegal, and it already has its set of like banking complications. We've ran into, like, I don't want to say I guess challenges is the right word, where we've had a lot of interest where people are like, yeah, we really want to support this. We can see that you guys have turned the business around and you're on this pathway to profitability, but we want to wait and see what happens with rescheduling to see if Trump actually does something or not. So I don't know. I know my answer is going to be totally different than the others on the panel, but that's been the one thing that's been somewhat challenging for us. The rest of it, not so much. I mean, just education, constantly going out and talking about it. Even, I would say, even internally, just like with myself, the more I talk about it, the more Bitcoin events that I show up to, and I speak to other Bitcoiners or other people that are doing similar things to what we're doing, maybe in a different industry, I get more convicted and I get like more aligned on what we're doing and why we're doing it. So yeah.
Makes sense. Yeah, I sympathize, or like I definitely, there's a lot out there in terms of wanting to see how much Bitcoin, because I mean, Bitcoin's a tool for people when there is challenges from a government or existing banking system. It's the idea of, you know, Leef kind of using Bitcoin for operations, taking payments or something like that. But be curious to see how that grows, if it does, as a percentage of overall revenues or operations. Speaking for Unchained, in terms of your question, Preston, I think just fortunately, I mean, we're here. The tide is in, the tide is up. You know, kind of a thing for us, and I think a lot of Bitcoin focused companies and for our clients. And so, our biggest issues have to do with just making good strategic choices in terms of what's next and how to allocate to different product lines. And it's a fortunate problem. At the same time, still doesn't mean it's easy in terms of what percentage of our roadmap do we dedicate to trading or lending or other classes of products, because we are right now, and it's kind of there on this call in terms of, you know, like the Newmarket offering and Leef doing, but there's the collision of Bitcoin into traditional finance, traditional financial models, and then the products that are there, and then where do these intersect? And like I was looking at, they have like the menu of the things available on chase.com for any client, and you know, us being a financial service institution at Unchained, what of the list makes sense to do next, and you know, how complete do we consider different product lines, and how to allocate across those has been it's probably the thing I spent the most time thinking about these days.
Yeah, for us, I mean, we manage money on behalf of large institutional investors like pension funds, sovereign wealth funds, insurance companies. And I think we've all seen in the financial retail market, there has been huge demand for Bitcoin exposure, whether it's through the ETFs or through the Bitcoin treasury, publicly listed companies. You know, there's so much capital flooding into those segments. On the institutional side, it's still strange for someone to bring up Bitcoin. We go into so many boardrooms and we're the first to be talking about Bitcoin. They're just ignoring it. So many are either ignoring it completely, or there are people that are super interested and get it and want to participate, but they're afraid to bring it up into more senior levels. So it's still the education, especially at senior management levels of large institutions, to start, you know, paying attention to it. You know,
Katie, what is the thing that's like the biggest hurdle for them to overcome? Like, what is it that they're not getting on the education side?
They're just not spending any time on it. They're just not. They're not paying attention to it. It's still super speculative to them. It's not really real. It doesn't really mean anything. And so, but anyone that does start paying attention to it and puts time into it, I've never met anyone that's walked away from it.
Yeah.
And so you just need them to pay attention.
Do you think that the whole IBIT, you know, iShares, BlackRock, like all these big banks, Fidelity, like starting to pay a lot of attention to it? And I mean, it's coming up as talking points for them all the time. Is that helping the progression, or?
It helps, but again, it's all on the retail side because they've seen the demand on the retail side. But on the institutional side, there's this huge disconnect, and they're not paying as much attention to it. And there are people that are paying attention to it, but then often it's the risk of career risk that they're worried about. So I think all of that helps for sure. I mean, Bitcoin is just making Bitcoin more mainstream, more talked about every day, more of a just a larger asset. And so it's harder and harder to ignore. And I know it's going to get to the point where it's impossible to ignore, but we're still working towards that point.
It seems like they just really don't understand why it's pristine collateral. And it seems like the volatility might be the main thing of why it's just never really taken seriously as pristine collateral. And I think for people that hear that phrasing, or they hear me say pristine collateral, they're like, well, why are you saying that? And I think for people that aren't intimately familiar with taking collateral, you want it to be hyper liquid, meaning I can go and I can exchange it at any time of day, quickly. And since we're operating in a market that's open every day of the year, it doesn't matter if it's a holiday or what, it's the market is open, it's very deep, you can exchange it on the spot, and you can immediately settle. So I don't have to wait for a truck to deliver a gold bar for, a week. I can immediately take physical payment of it and check it against the node, like right there on the spot. And so although it does have a lot of volatility, that doesn't negate like why it's such pristine collateral when you're posting it against something else to borrow. And I think this is just lost on society at large, even for people that deal in this space all day long. They're just not used to seeing something as volatile as this being considered decent collateral. And I'm curious if you guys would agree with that, or if you see other factors that are causing that education burden to continue to persist. It seems it just never goes away.
Yeah. Go ahead, Micah.
I would agree with that. I think your question on IBIT and Fidelity, has that helped? From my own personal conversations with existing shareholders, for sure. When we first started talking about it before the ETFs were around, these very smart, wealthy traditional finance people that we have on our cap table, their initial reaction was just like, no, what are you doing? This is a crazy idea. Now that you've got these large institutions daily now that are just out there talking about how much Bitcoin that they're buying and how they believe in it, and they change their stance on it. Now I'm getting phone calls back from people that were saying no, that are like, hey, actually, now all of a sudden it's safe to talk about it. But I still think that there's so much education that goes into trying to fully, if you don't, what I was going to say is there's a lot of education that goes into trying to explain what Bitcoin is and why it is pristine collateral. And I'm also a big believer that if you don't understand what the problem is, then you might have a harder time understanding why Bitcoin is special and what it solves for. And it's kind of cliche, I think, just because everyone says it, but just you got to put in time. And so for me, it being in an operational company that's trying to explain this to other people, spending the time, sending books, sending people's podcasts. Preston, I've sent your podcast so many times. It's just like, I think you and Natalie have probably orange pilled my own board, just with all the stuff that I've sent around. But you have to put in a lot of time to fully understand it. Back to just what I was saying, I think if you don't understand what the problem is, centralized banking, fractional reserve currency, that type of stuff, you might not, it's going to be harder for you to understand why Bitcoin is special.
Yeah, I think other than a Bitcoin focused interest, I probably, a characteristic Unchained probably shared a lot with your business and industry, Micah, was early on just the challenge of getting a bank account. Like my answer to the question for my first 12 to 18 months of trying to stand up Unchained was just getting a bank to get far enough along with us to open a basic operating account. So our problems have shifted, but also one that's thematically around, that's on theme with what we're talking about is just the nature of capital markets. And to your point, Preston, of it being pristine collateral, which seems so obvious to me as well, not having been in lending or financial services necessarily before starting Unchained. And so then on just a basic principles level, like this stuff, this ought to be one of the best pricing for loan, most capital available towards this kind of a collateral in the financial system, better than house mortgage, which you can't mark to market 24/7 and takes a long time to repossess and those things. And so just understanding that capital markets don't work that way, or as rational as we like to think about investors being, or making decisions on principles, most of the decision making, especially at institutional scales, is on behalf of other people's money or in context of committees and boards. And so it's been a huge lesson in just human psychology and what it takes for ideas to propagate and comfort to be found in something new. And just how distorted the financial system is, because probably most people would consider the most pristine collateral, most people in like a Wall Street finance perspective would consider pristine collateral to be treasuries, or pristine collateral to be something else. And so that's what has more of that characteristic of any institution will take it as collateral and give you 100% LTV, or like something not, they won't really count on LTV at origination. And so, and then the mortgage industry is itself distorted due to government intervention and government support for mortgage lending programs and things like that. So yeah, so it's been a reckoning of just like what we think it should be, what seems correct and ideal versus the reality of how capital gets allocated.
I hope I'm wrong about this, but like it wouldn't even surprise me if big banks and Wall Street at large would start accepting IBIT shares as collateral and be more interested in collecting that as a form of collateral, because it's so similar to marketable securities and what they're used to in receiving like ETFs as collateral before Bitcoin itself, which is the thing that's actually settling at any time of the day, any time of the year. And I say that because I think we have lost our way as a society to even understand what banking even is. I think traditional banking, as in modern day banking, fiat banking, isn't rooted or grounded in this idea of receiving something and storing it and protecting it and custodying it. Right? We've moved so far away from that with treasuries being this underpinned thing, and whether you have a Fed account, and like it's so convoluted and just doesn't even make sense. And now we're going back to square one where we were 300 years ago in custodying gold bars in a vault and making sure that if you issued a paper certificate for it, that it was actually in the vault. And so when I look at what you're doing, Joe, at Unchained, you're getting back to the ground roots of like, what is banking itself? So do you find, when you're thinking through like multi-sig, when you're thinking through like fiduciary trust and unlocking the institutional adoption of Bitcoin, is this the issue? Is that we've just completely lost sight of what banking even is or what it represents as we're onboarding all these institutions and they're falling into, the ETF potentially being a better form of posting collateral than the Bitcoin itself?
1,000%. Yeah, it's the stack of financial services. It's like the turtles all the way down kind of a thing of intermediaries, and that back to basics, even what like constitutionally and our framers had in mind when they were devising our rights to life, liberty, and pursuit of property or happiness. That was a principle they held, or that idea of like being able to acquire property, hold it yourself, and then transact with each other around it. And so yeah, we're all very confused. It's kind of the current system obfuscates the things here, and so I do feel like we're in a process of kind of rediscovering some of those principles or reliving those at Unchained. And yeah, and just that, and that the incentive, but it's funny kind of being in this position, I also see the incentives that are there. And it was there in our early moments of taking Bitcoin collateral for our loans that we started in 2017. And then, thinking like a capital allocator, thinking like a Buffett or somebody like that, here's all this great collateral. Should I be doing something with this? Oh, should we be lending this out? And then we decided no, but you saw who did. You saw the BlockFi's and the Celsius and others. And that was a very much a mindset of copy pasting what's working in banking into this new world. And when we saw what happened as it fell apart. And so, we take kind of great care to kind of build things in a layered approach that isn't just doing something because it's what I did in my prior role at JP Morgan or something like this. That's not what's happening here.
Yeah. Any other comments from Katie or Micah on that particular topic?
No.
Okay, let's move on to the last topic here. The board, dealing with this from a governance standpoint. because it almost seems like the issues that we're facing is just always leads back to the education burden of like, how can we get everybody to understand the value prop of this thing? And nowhere else is that more evident than in a boardroom where, you know, everybody's got strong opinions. These are all people that have business leadership experience for the most part, and that's usually what you're facing. And if you get a couple people that just don't really understand like what in the world this crazy, you know, magic internet money, 70% annualized volatility thing is, it can throw a huge wrinkle in, you know, the strategic vision of where some people might see the business going. So talk to us about any, I know it's a little hard to talk about personal experiences, but I guess talk about them more broadly. Like, how do you see this?
That's
You
it.
want me to go?
Go ahead, Micah.
Go. No, go, Joe. Go.
Only, I mean, just to add that I think like my experience, thankfully everybody that came onto our board was already investor, and so already kind of convinced, and the education had to be there. We did support Ethereum for a year early on, like a little known fact sometimes about Unchained, and that was an education process there, and we kind of, you know, a lot of investors were scared at that point of like, oh, here are we excising ourselves from a market? At that point, thankfully we had data just about only so a very small fraction of our business was consisting of dealing with ETH. And then my only other point about education is I appreciate always the Howard Marks maxim that the riskiest thing is to believe there's no risk. So I actually enjoy that there's still some asymmetry in the market embedded in the idea that there are still so many holdouts at boards and on investment committees who need convincing. And so that just means there's further appreciation ahead for all of us.
Yeah, I guess I could speak to my own personal experience with it. So, you know, I'm the founder of the company originally, and I've heard many podcasters talk about this, that it does help if you've got the founder and the CEO that's a Bitcoiner and a believer in it. And so we had that going for us, but the problem was none of my board was Bitcoiners, and I was new to it myself. I was like my dad was a gold bug, and I understood, you know, he had my brother and I read Dr. Jekyll, Jekyll of the Creature of Jekyll Island. So I understood centralized banking, and I was like a huge Ron Paul fan, and I had all those things. That Bitcoin was brought to me multiple times, being in the cannabis industry, you know, so I'm in this cash business for, you know, my entire professional life pretty much. And when Bitcoin started coming around, I had a lot of people coming to me saying, Mike, you should really take a look at this. And my knee-jerk reaction was like, this is just like Pokemon nerd money, like not interested. And I was always buying gold, not a bad decision, but I was ignoring Bitcoin. And it wasn't until a couple years ago that someone else in the cannabis industry that I really respected came to me and said, Micah, he understood kind of my thought process around politics and sound money and all that kind of stuff. And he's like, you really should look at this. This is definitely something that you should not take the time to educate yourself. So I did. I got about halfway through the Bitcoin standard and was like, oh shit, I got this wrong. And so then I started going down the rabbit hole, and I spent all these hours, just like everybody else, right? Podcasts, books, you know. And then it took me, you know, a year I've got traditional finance guys on my board. One guy was a Goldman Sachs guy. Our CFO he's a Canadian. He's probably listening right now, actually. He is definitely a traditional finance guy at heart. And so it took a long time of just doing the same thing, barraging them with like, you guys have to read these books, you have to, and it worked. Same with my shareholders. I have a couple guys that were like long time, you know, BlackRock, very smart, very wealthy New York traditional finance guys. And a year and a half, you know, toward now, they're finally calling me back saying, Mike, I think you're, you know, not that I'm just like, but you're onto something. Like maybe you're right. Maybe you should really keep going and explore this. So yeah, that's the process that I went through, and just being relentless about it. I think just if I was giving advice to anybody that's in the same position and you're trying to figure out like, how do I get the rest of my company into it? Stay convicted on it. For me, I listen to a lot of podcasts, and I go to a lot of these Bitcoin events just to like be around other people with the same kind of thought process and just constantly educating myself on it. And I'm not I'm a couple years into this, like where some other people are like many, many years into it. So I'm not trying to pretend like I know everything, because I really don't. I'm a white belt in, you know, jujitsu terms, when it comes to my education on this stuff. So, but just to stay relentless on it, and don't get frustrated with someone's misunderstanding of the subject. And like I said earlier in the conversation, it's like try and get them to understand what the problem is, so that they'll have a better chance of understanding what Bitcoin solves for.
I love that last part, because yeah, you're right. I can't even tell you how many people I've asked to read this book or listen to this podcast, and you know darn well they just don't do it, right?
Mm-hmm.
And so you do have to be relentless. But I think to your last point, if you describe the problem, then they're more interested in understanding that there's a solution. But a lot of the times people just see it as this speculative thing, and you're not starting from the first principles of like what the problem is. But last word over to you, Katie.
No, I was just going to say, I mean, before Newmarket, I was in banking. I worked for a very large global financial institution. And if I ever brought up Bitcoin, it would be like, yeah, Bitcoin, but I'm really interested in the blockchain. You know, blockchain was safe, Bitcoin was not. And so I'm just very lucky that now being at Newmarket, we are a very entrepreneurial, innovative, forward-thinking firm with forward-thinking people and management and board. And so, you know, we've been able to come up with an idea that we think makes a lot of sense and pursue it and implement it. And I think it just takes more people to be forward thinking and not just caught up in the day-to-day and what currently they think works, and keep an open mind.
Oh, I don't miss the days of it's blockchain. I do not miss the days. They lasted for so long, and they seem to be somewhat going away now. So that's good. But guys, this was a blast. Thank you for allowing me to come in and just have the conversation with you, and amazing comments. And hopefully it was value add for all the listeners out there.
Thanks,
Thanks, guys. Thanks, Preston.